Welcome back. I'm Pratap here. Today is 3rd May 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report, yesterday's report. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons can be accessible at our NeoStock YouTube channel. So please visit our channel, click on this community tab. Here I already provided a post having a link that will take you to the playlist having all the training videos. You just click this YouTube playlist link and then you will get into supply demand zone price action course playlist having all the training videos. So you just need to go down to the bottom of this page. Here starting from lesson 1.1, all the training lessons are available in an order. So go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. Yesterday we identified 7 high liquidity daily and 75 minutes demand zone. And we got only one trade, that is Conquer. Actually Conquer is supposed to be violated. But during the market, in today's market, institutions again created a new zone. So in that fine-tuned 5-minute zone, we got a trade. Excellent trade, a perfect trade. So first let us look into this Conquer. This is a 75 minutes high liquidity supply zone. So we have a rally, 3 base candles and a drop candle. When you want to fine-tune this zone, so we have to get into the 15 minutes time frame. If you look into the 15 minutes time frame, look into the structure of this zone. See the price action here, all these candles. So the structure is very bad. Such kind of zones will be violated easily. The only condition that will not be violated when institutions decide to create a new zone inside this, the new fine-tuned zones inside the 75. Anyway, 75 is a high liquidity. Generally in high liquidity what happens? Institutions will keep on create the new zones. If they don't create, probably the zones will be violated. That's why we are identifying when a zone will be violated. If they create a new zone, in the next retracement we will get the trades. Sometimes what happens? Institutions create a new zone during the intraday. While creating the zone, we won't get the trade. But the same intraday, again the prices will be retraced into the same zone. That way we get the trade. And many times they reach the target also. I thought initially today, when prices entered into this zone, I thought this will be violated. But after some time what happened? Prices were keep on moving in this zone. Then I realized maybe institutions are creating some price action. That's why I closely watched this zone during the intraday. See here we have a rally candle, base candle and a drop candle is created. After that a follow through candle, another follow through candle, another follow through candle. So this is the way a new 15-minute zone is created. So this is what you will be having clarity now. We have a rally, base, drop. So at some point of time I also thought about this. See ERC candle. This is the candle some of you may consider as a base, but actually this is also a ERC candle. Having a minimum 40%, 30 to 40% body is also there. So keeping it as a base candle doesn't make any sense. When see, these are the large ERC candles. Many people get into the trap like this only. You compare these three candles. While comparing these three, this is a smaller candle, no doubt in that. That's why what you draw, this is a leg-in, base, drop. This is the way you draw. But that is wrong. These are all high explosive candles. See, this is the leg out. This is a valid leg out candle. Not a high explosive candle, but good leg out. If you look into this candle, the size of this candle is almost same as this leg out candle. Then how can you consider this as a base candle? These are the mistakes many people do in the initial stage. See, this is the medium size leg candle. Base candle. This is the medium size base candle. So that's why we have drawn. Maybe 15-minute zone you can draw even like this also. But anyway, to reduce the risk, what I did, just a reference. See, for us 15 minutes is only a reference. Our ultimate zone is a fine-tuned 5-minute zone, right? So that's why either you can draw like this also for the reference point of view. Rally, base, drop. Now go to the 5 minutes time frame. Now you can see the fine-tuned zone here. 5 minutes. We have a rally, 2 base candles and a drop candle. Perfect zone. So type 2 proximal. This is what generally. See here. See the next candle. See the rejection. This is an indication that this zone is having a strong order flow. Prices didn't reach up to this area. Before that, the strong rejection. After that, see how prices were further down. When you get such a big push, even next candle also went down. When you see from here to here such a big push, there is a strong order flow. Next time when prices are entering into this zone, you should not miss it. See what happened? When this zone is created, first of all, today at 11:20 minutes. After that, prices came down, and at 12 o'clock 35 minutes candle, prices entered into this zone and we got the entry. And you know, from high liquidity zones, new zones will be created. Generally, we think like that, right? See here, rally to base candles, drop is created from this origin. This is the entire 15 minutes area. Inside the 15 minutes area, new zone is created. If you think like this, this is another. Let me draw a supply zone. Yeah. See, another entry you got. One more entry you got. Multiple trade opportunities we got. This is within the 15 minutes area only. Within the 15 minutes, this is the first 15 minutes we got the entry. Institutions created a new zone. Again from here we got the trade. If not, again we got the trade from here. This is almost at the closing hours of the market. And what is our target? This is the 15 minutes target. Let me go to the 15 minutes time frame. See, here you have a leg candle. That way you can consider this is leg-in. 3 base candles and rally. But today, what happened? Prices did not reach into this target zone. Before itself, prices started moving up. There is a reason. Actually, what I did, I went to the 1 minute time frame. In the 1 minute time frame, see the zone. First, let me delete this because we are considering this trade. We have a drop, we have a base, we have a rally, follow through candle. I suspected this particular zone. Suspected means in a positive way only. Why? Because I'm thinking this zone will not let the prices to reach our target zone. Why? There is a reason. I don't know how many of you remember. I think around 2 weeks back, exactly the same structure we have seen in one of the high liquidity trade. I didn't remember the name of this stock, and also I didn't get time to refer the old videos. If anybody remember, please comment in the comment section. Exactly the same structure. Just before the 15-minute zone, we have a 1-minute zone we have seen. Couple of weeks back, we got a trade, successful trade. And even in that 1 minute, what we observed, the order flows are exactly here. See here, we have a rally candle. Again, we have a drop candle. Again, we have a leg-in candle. See, exactly here they are holding the prices. Within this small, maybe 10, 20 paisa difference, within that area, it is holding the prices. See this candle, see this candle, see this candle. Sometimes what institutions will do, at lower time frame, they create a very strong order flow. They will not let the prices to get into this zone, target zone. What we will do, we will wait, we will keep on waiting for prices to reach this zone, but they never come. And finally, all our profits will be reduced. That possibility is there. See here, when prices came here, it is holded the prices in this candle. Again, it is from this area, prices were started moving up. Then whatever I thought, I got the confirmation. This is the area you should book the profit immediately, without any hesitation. If at all, in case your analysis is wrong, this zone is violated, reached the target, probably a small portion of profit you may lose. Expected profit, I mean, it's not that you lose, expected profit will be reduced. Maybe that is the right word. Because anyway, you got a good profit from here. But what is the difference between this trade and the 2 weeks back, the trade we have seen? In the 2 weeks back, the same zone, again and again, prices came nearly 2 times or 3 times. That way, we confirmed this could be a high liquidity zone. Because I have remember that structure, price structure, and here also the price structure is same, I am thinking that the institutions are playing exactly the same way how they played earlier. This was my impression. That's why this is the zone immediately you need to book the profit. But there is a possibility. What is the possibility? The prices may go a little up. Here there is a supply zones are there. Again it will push the prices down. And finally it reach the target. Suppose if the supply is violated, definitely it is a confirmation that this will not let the prices go down. And immediately what I did, I put a message in our Telegram group. What is that I told you? Book the profit based on 1 minute trailing stop loss. I know this is the area you need to book the profit. According to me, this is a valid analysis. But for our point of view, maybe if this is violated, if this 1 minute zone is holding, probably you will get more profit. Or if it is not holding, which one? This supply, 1 minute supply, definitely prices will go up. If you don't book the profit when 1 minute supply zone is violated, your profit margins will reduce. So that's why when prices are somewhere here, immediately I took some screenshot because I didn't have time to explain all this analysis to you guys. Because within a few minutes, within few minutes prices moved up. Probably the moment I posted this in our Telegram channel, probably prices might have reached into this, or just maybe at the time it might have violated this zone in next 1 minute or 2 minutes time. See, everything happened in few minutes time. Probably I might have posted when prices are here. See, after that next minute, the zone is violated. That means this is the supply zone. So in this candle, you need to exit and book your profit. Because the 1 minute zone is violated. See, after that what happened? It took a lot of time prices to reach again, but they didn't reach this zone. When prices reached this zone, almost closing hour of the market. At 3 o'clock, maybe 3 o'clock, 18 minutes, prices again reached this zone. Just slightly pierced, but they didn't go down. Last 10 minutes of your trading closing session. But you can't hold the positions up to that much level, right? Till that, in case if you are doing intraday trading. If you would have taken a trade in F&O, futures or options, probably you can hold till the last minute, or maybe you can carry the positions till the next day also. But if you are taking a pure intraday trade in cash, probably by 2 o'clock 30 minutes or 45 minutes, depending on your broker's policies, you need to close the trade. So that is the reason why I immediately alerted you guys in our Telegram. But I don't know how many of you really took a trade in this zone in today's trading session. But it is a very interesting. First of all, why this zone we need to concentrate? I know many of you might have ignored this zone thinking this. Even I also did the same. Generally, I have the habit. Every 15-20 minutes, I just go through all these stocks in the playlist. Generally what I do, I go to the daily time frame or sometimes 75 minutes time frame. I open all the stocks and I see overall bigger picture I will see. So when I am seeing many times the prices were here in this area. Okay, now closing came here. But when I was watching at 11 o'clock or 12 o'clock, the prices were within this range. When it is there so much of time within this range, there are higher chances that a 15 minute zones will be created within 75 minutes area. Anyway, this is a 75 minute zone. There are higher chances. See, today, a lot of time the prices are here. That's why I was started monitoring what is happening in the 5 minutes time, 15 minutes time frame. Then after this candle, I realized a 15 minute zone is created. So when I did the analysis, quickly, I found this is a fine-tuned 5 minute zone. I thought this is the right place. In case if the retracement happened during the intraday, we should not miss the trade. That is what I thought. See exactly the prices came and how it came. But they failed to reach 15 minutes target. But our trailing stop, you already learned in lesson 18 or 19. Okay, one of these lessons, you learned a trailing stop loss. See how trailing stop loss would have helped you. If anybody would have remembered the same analysis we did one of the stocks earlier, the 1 minute how we booked, today we would have booked the profit here itself. Because it is a confirmation, it is holding the prices strongly, this zone. Maybe institutions added a strong order flow in this area. So this is the maximum opportunity it has given. But I am sure, I don't know how many of you booked the profit here. Exactly the way how I thought I did the analysis. But at least I gave you my suggestion in the Telegram group. So that in case if you would not have booked profit within this 1 minute zone, you would have booked the profit when this 1 minute supply zone is violated, you would have booked. But from here to here, how much profit it has given? This is the maximum profit. The opportunity high liquidity zone. I am not telling you that you would have booked your profit here. But the maximum opportunity today, our high liquidity zone given is 10,900 rupees profit. And which is 5.2% return on the investment as per one futures margin cost. Now you may ask a question. In case from our entry to this 1 minute, what is the RR? The RR is close to 1:5. So 4.9 RR is there, 1:4.93. That means close to 1:5 RR is here, from here to here. So it is a 1:5 RR trade. Okay, we don't book. We book the profit when the trailing stop loss is hit. How much profit we would have got? This is the question you would have got. Suppose if you would have exited when this 1 minute supply zone is violated, that is your trailing stop loss, you would have exited somewhere here, then you would have got a 7,250 rupees profit. If it is within this proximal line of 1 minute zone, you would have got 10,900 rupees. Maybe you would have missed a additional 3,500 rupees profit. But still 7,250 is a very decent profit. You may ask how much return on the investment we would have got if you would have booked after trailing stop loss failed. That means the supply zone is violated, so immediately you need to book the profit. Then you would have got an ROI 3.5%, 3.5% return on the investment you would have got. If you would have booked the profit within this 1 minute zone area, it is a 5.1% or 5.2. Yeah, 5.2% ROI you would have got. I am sure many of us definitely waited to, we will be having confidence prices will be reaching this 15-minute zone. Anyway, you might be using trailing stop loss. But booking the profit here is, you should have remembered the analysis we did a couple of weeks back. Then you would have sensed there is strong order flow here because it is not letting the prices in all these candles. That itself is an indication. The 1 minute zone is a very, very strong 1 minute zone. Or maybe when prices are going a little above, you would have somewhere here you would have booked. Actually, exactly here. I took immediately the screenshot and I put in our Telegram group and alerted you. If this 1 minute zone is violated, you need to book the profit. The trailing stop loss, 1 minute trailing stop loss. So anyway, this is a very good lesson for us in today. Conquer. The zone we thought that will be violated has created a new zone and provided an opportunity. It is not a single opportunity, multiple opportunities it has provided. What is that multiple opportunities? Within this 15-minute zone, this entire area is 15-minute zone. This is the first 5-minute zone is created. After that, within the same 15, one more 5-minute zone is created. This is the one, rally, 2 base candles and a drop. This would have been another opportunity for you. Maybe based on the trailing stop, again you would have booked the profit somewhere here. And this is the third opportunity to you. Almost close to the closing hours. You can't take trade in the cash during the closing. Maybe definitely in F&O, futures or options, you would have taken a trade. Again, this time it pushed up to this 1 minute area, fine-tuned area. I mean, it's not fine-tuned, 1 minute zone. Maybe this is the way, maybe you would have got another 7,000 or 8,000 rupees profit you would have got from here to here. Anyway, I didn't capture those in our Excel sheet. I only captured only one. Just telling you how many opportunities we got in a stock, Conquer, which we thought this is going to be violated today. Not today violated, but the zone will be violated. But see the kind of interest institutions has shown in today's trading. So all these observations you have to do. Why I am concentrating more on this stock is, this is how you should not see the zone is violated, there is no proper trade is there. That is what you find in your analysis. After that, you should not forget that particular stock. That is a mistake many of you might be doing. You should not leave that stock until it is violated. If it is not violated, you have to keep in your watch list. Still, you should keep observing. Sometimes you may get dynamic opportunity. What is dynamic opportunity? In our previous analysis, the stock may not be in our favor. Dynamic means during the live market, the institutions may create a new zones, new fine-tuned zones inside our high liquidity zone. Our high liquidity is 75 minutes. What is the fine-tuned zone? First fine-tuned 15 minutes zone. Inside 15 again, the next fine-tuned zone is 5 minutes zone. That is the place where we plan our trades. See, this is not the first example. You have seen such kind of examples previously also. Several times. I remember even once I ignored such kind of analysis. But one of our members reminded me that. I still remember it happened I think maybe around a month back. After that I took nearly some 2 days break because that time my situation is different. I was keep on recording the videos morning to evening without rest. I know my brain is completely tired. So at that time I missed such kind of analysis. But you guys made me remember. You guys made me remind. There is a new zone is created in the market. The same thing happened today. Definitely you should have noticed this. I don't know how many of you, because I haven't seen any discussion in the comment section about this new zone creation. Because generally sometimes I used to see what you guys are interacting. I do, because my time is very less. Just quickly, I won't read all your messages. I won't get the time. But I see, okay, a particular stock, you people are having some interaction. That at least that kind of idea will be there for me. But I haven't seen any interaction among you people. Otherwise, you would have got a very good, decent profit today. Multiple opportunities. This is one opportunity. This is the first opportunity. This is the second opportunity. This is the third opportunity. Maybe here or here. Either one. And all these opportunities has given you some profit. Some decent profit. Okay. This is about Conquer. Hope this will be a good lesson, at least for some of you people. Now let us look into the other stocks and how we fine tune. Crompton. Crompton is a daily high liquidity demand zone. So I opened in the daily time frame. This is what we have. This is the leg candle. Software identified. Why? Because hidden body. We have added the hidden body from here to here. Ultimately, this has become a leg-in candle, medium size leg-in. And then we have 4 base candles, and again with the hidden body, a leg-out candle. Generally, such kind of zones we won't identify. Many times we may ignore such kind of stocks. Okay. So now within this daily zone, we have to fine tune with 75 minutes time frame. So here we have a rally, 3 base candles and a rally. And also we have a rally candle, 2 base candles and again a rally candle. So 2 75 minute zones are created. Now within this 75, again we fine tune with 15 minutes time frame. So 15 minutes, the structure is not at all good. But here, overlapped with this zone, but at distal line. The overlap is at the distal line. Recently, we have seen such kind of zones in Nifty and Bank Nifty. They are the origin behind creation of some higher time frame zones, that is daily level. But I am just telling you these examples. So we have a drop, base, rally. After that, prices came, picked up, and then this entire move we have seen. This is the 15 minute zone. And here also exactly the same way. We don't have a proper structure here. But below again, overlapped with the distal line of this 75 minutes demand zone, we have a 15 minute zone. We have a drop, base, rally. But have you noticed I didn't fine tune at 5 minutes level. Only 15 minutes we stopped. That means 5-minute zones are not good. Let me go to the 5 minutes time frame. See the 5-minute structure within this area. Maybe I am not happy with this structure. All these candles. Maybe I could have drawn a zone like this. But somehow I am not comfortable with this. So I'll just left it. Don't want to take any unnecessary risk. Even if I draw like this is a demand zone, right? Already picked up the orders from this zone. It already picked up the orders. So anyway, first of all, the candle structure somehow I didn't maybe it is valid, because anyway, that's why it picked up the orders earlier and moved up. And here also I am not comfortable with this. See, here you have a drop candle. We have again a rally candle. Both are large candles. But in between there is no base candle. They are not medium sized candle. They are the large candles. This is high explosive. You can't compare with high explosive. But large candles you compare. High explosive are much bigger than the large leg candles. These are not medium size. So that is the reason why I didn't find any base candle in between. When I don't have such kind of zones, generally I don't prefer. So anyway, just left it. So that way Crompton, there were no trade plans in the Crompton. If prices come here, played somewhere here, created a new 15-minute zones, like what happened in Concur, if such kind of things happened, maybe we can consider. But anyway, today prices didn't come into this zone at all. This is one thing. There is another thing. The same zone is also having high liquidity supply zone is also there. This zone, same zone. At 75 minutes time frame or daily. This one is a daily zone, I guess. Let me change the time frame to daily. Yeah, because both are, demand zone is daily, so supply zone is also daily. Both are high liquidity zones. And this daily zone, see, sometimes what happens when both demand and supply zones are high liquidity zones, either side there are chances that we get trade opportunities. So that's why I fine-tuned when this zone is created in 13th January 2023. So I have fine-tuned with 75 minutes. Inside 75, I fine-tuned with 15 minutes. But inside 15, I couldn't fine-tune with 5 minutes because trading view data is not available for 5 minutes time frame. Just short of 1 month or 1 or 2 months short. Because the last 1 year, this is May month, right? So till April the data is available. So February data is not available. So because the data is not available, we cannot fine tune this zone. So I just left it. But see, today prices came into the zone, but they entered only up to this fine tuned 75 minutes level, close to that, and then prices came down. Maybe there is a strong order flow here. This happened yesterday. In today's candle, prices have just entered into this daily zone, touched and again came down. So anyway, we didn't get a trade in Crompton. And the next one is Gujarat Gas. Gujarat Gas, I already explained you how to fine tune in the previous videos. Maybe if you refer last 3 or 4 videos back, I have already explained. And today, prices came very close to this. Let me go to the 5 minutes to fine tune. We have a fine tuned area. So here we have a fine tuned area. This is what we have fine tuned at 5 minutes level. We have a rally, 3 base candles and a rally. Because the risk is high, in case if anybody feel, even we fine-tuned with 1 minute level also. This is the one, inside 5 minutes, 1 minute order flow is also there. In case those who feel cannot accept more risk. But today prices came close to this, but they didn't enter into this. They came close to the 5 minutes area. You may ask, if you add the entry buffer, we would have got a trade. No, even after adding entry buffer also, you are short of around 20 paisa or 30 paisa. Still you are short of taking the trade, accepting the trade. So that's why we don't get the trade. But otherwise, even this stock also would have given profit today. But anyway, this is not a trade as per our plan. I mean, it is not an executed trade. It is a missing trade. Missing trade because the price is short of our entry buffer. So Gujarat Gas also we didn't get a trade. And Reliance is a violated, zone is violated. This is a daily demand zone. We know that the zone will be violated. The reason is Reliance didn't have any fine-tuned fresh zone. We have a tested zone. See here. Previously we discussed. I think in previous 2 or 3 videos back we discussed about this Reliance. So one of those videos I explained how I fine-tuned. So at the time we have seen this zone is tested. Because it is tested zone, we can't plan a trade unless any new zones are created. Otherwise the zone will be violated. That is what we discussed. So Reliance is violated. And one more thing, if anybody would have planned for any bear traps, definitely it would have been stopped out. See, bear traps, the biggest problem with bear traps is every 5-minute zone may not be a bear trap at critical levels. What is the critical level? Sometimes it is hard to find. Anyway, I will be explaining all these scenarios in our tomorrow's. Tomorrow is Saturday, right? So in tomorrow's next training lesson. So next training lesson is about bull and bear traps. So I already completed more than half of the presentation. The remaining half I will be completing tomorrow by morning, and after that I will record and I will publish. So at the time we will discuss these issues. Especially there are few limitations with bull and bear traps. But if anybody would have planned, definitely it would have been stopped out today. And the next one is CIPLA. CIPLA is a supply zone, high liquidity daily supply zone. See, we have a drop candle, 3 base candles, and again a drop candle. We have a fine-tuned zone in CIPLA. Because I have seen some of your comments, you were thinking there was no fine-tuned zones. But I found a fine-tuned. So compare what kind of mistakes you did. So, okay, inside first, what is the first step? We need to identify a 75-minute zone. So we have a 75-minute zone. See, this candle we can consider, this is a big candle. You can consider as a leg-in. So maybe you may think this is a base candle, right? But this is bigger than a medium-sized candle. So you can consider this as a failed ERC, and it is valid leg-in. So leg-in point of view, okay? And you have 1, 2, 3, 4. Actually, this one also you can keep part of the base. There is a reason for omitting this. Because sometimes, what happens? The leg outs will be sometimes may not be very great with follow 3 candles. If you combine both, the zone looks very good. Sometimes. So with that point of view, I just kept it. I didn't include this candle as part of the base. Anyway, for us, more important thing is the order flows at 5 minutes levels. Even if you keep this part of the base, still you have a valid leg out. Only the width of the base will be increasing. That is the only exceptional scenario I have taken here. Anyway, it doesn't impact our analysis. So here anyway, we have order flows here. So what I did again, next I went to 15 minutes time frame. In 15 minutes time frame, we have a rally, 1, 2, 3, 4 base candles and again a drop candle. So this is rally, base, drop, and then again you have a drop, base, drop candle, drop, base, drop. So we have two 15-minute zones. See, this is a 1 15-minute zone and this is another 15-minute zone. Now both these 15-minute zones I have fine-tuned with 5 minutes time frame. Now look into the fine-tuned zones. So I consider this as a leg-in drop, 1, 2, 3, 4 base candles and again a drop candle. And if you observe, see here, tested once, again tested, again they came very close. So almost they are tested only. Again they tested, again they tested, again they tested. So that way multiple tests are happening and moreover more rejections are happening. See the strong rejections. Here there is a strong, here there is a strong. That means this could be a very high liquidity area. That possibility might be there. I was thinking like that. Maybe a strong order flow is there in this zone. Even though it is tested, but multiple tests are happening. If it is a high liquidity, still rejections are happening. Maybe there is nothing wrong. Again trying, planning a trade in this zone. And here again you have a drop, 3 base candles and a drop candle. But here risk is a little, high risk is there. Suppose if this zone is violated, we can plan a trade here. And by the time prices reach, this zone would have consumed a lot of demand. And demand would have been weakened and probably you may get another perfect trade from here. This was the plan. This is the first trade. In case if this is violated, again you can plan in this zone. If you feel risk is very high, what you can do? You know the techniques. Go to the 1 minute time frame, see if there are any deep order flows inside. There you can plan the trade. If there is no deep order flow and the risk is beyond yours, you have to, you should not plan any trade in this zone. If this is violated, then only you can plan a trade. This is as per risk management. These are the techniques you should remember. So anyway, prices did not enter into the zone today. So we didn't get a trade even in Cipla. Next one is Aurobindo Pharma. Aurobindo Pharma is a 75 minutes high liquidity demand zone. This is the one. We have a rally candle. This is the ERC candle. So leg in. We have 1, 2, 3, 4 base candles and a rally. This is what identified by our software. So what, and previously these prices entered multiple times into this area. So what is our plan? Our plan is to fine tune. How to fine tune this zone? So here I have identified two 15-minute zones. We have a drop, we have a base, rally and follow through candles. This is 15-minute zone. Inside fine-tuned 5 minutes, that is already tested. Because it is a tested zone, we cannot plan a trade. See, today it is violated. Next one is also tested, but it is having some special significance. What is that? We will see. And here also we have, this is the compromised 15-minute zone. Because the leg-in structure is not very good, still I consider this as a leg in. Why? Because a little above this candle, a small, compare it to this candle, a small candle. So I consider that as a base. This is the only thing I just ignored. And this is a rally candle. So this is how I planned. This is my rally, base rally. I am more interested on 5-minute zone. See, I would have ignored this zone, but a lot of price action is taking from this zone. That's why I have drawn this compromised zone. Now what I am expecting, my 5-minute zone should be a perfect zone inside 15 minutes area. So that is here. See, this is very perfect now. We have a drop candle, we have a 2 base candles, we have a rally candle, drop, base, rally. The lowest of these 3 means leg in, base, drop is our distal line, lowest of these 3. All these rules you learn in our phase 1 training program. So excellent zone we have drawn. But see what is happening here. The prices rejections, just before entering there is a rejection. Here prices came close, rejection. Now just touched the fine-tuned 5-minute zone. Again see huge move from here. That means there is a very strong order flow. Not only that, after that again prices came, and after that see the rejection and see the move up, and again came close to this zone and again moved up. That means a lot of order flow institutions added here. Again here, see here you have a drop, you have a base, and see the move here, the rejections. And moreover, multiple times prices are entering in this zone, and with huge rejections they are going. Probably this could be a high liquidity zone area. If it is a high liquidity, when we confirmed after multiple tests, we are assuming this is a high liquidity area. But why we didn't assume this? First test itself prices went more deep inside. See, they went almost more than half it already covered. And this rejection is there. This rejection is because of the institutional order flow here. But one rejection is not enough. We need multiple rejections from the zone to confirm this is a high liquidity. So that's why we didn't plan any trade second time, easily violated. But this is the area, keep on it is testing. See today first what happened in the morning session? There is a rejection, price came very close and then moved up. But last closing candle, anyway closing candle we can't trade. But prices came, but see the rejection again. But only thing that happened this time is prices came very deep, close to the distal line it came, but still there is a rejection. Maybe tomorrow continue, maybe who knows, somebody might have took a trade, not intraday trade. They would have carried the positions till tomorrow or day after tomorrow. Who knows, maybe tomorrow continuation to this trade, prices might be going further up and up. That possibility is also there. Many times we have seen last minute of that particular trading day, prices enters into the zone, and from here prices will carry in the next trading sessions. But anyway, I'm just trying to tell you why this is a high liquidity, why we are ready to plan, but only bad luck is today prices didn't enter into this zone. Came very close, but they didn't enter into the zone. I don't know if anybody would have added a entry buffer, maybe you may get a trade. You would have got a good profit today in case. With entry buffer I didn't calculate because looking for entry into this zone, because already several times prices entered. Taking entry buffer and taking the trade is a bit risky. We have to let the prices go inside and we need to take a trade. Maybe a deep entry inside. Such kind of trades will be more reasonable, but this could be a lucky trade. If anybody took a stop buffer and took a trade, it could have been a lucky. Definitely would have got a good profit. Maybe 15 minutes target somewhere here. So here we have a 15 minutes, they didn't reach just before. Definitely here some 1 minute zone, strong order flow will be there. That might have pushed the prices. Here we have a 5-minute zone. We just pierced and came. Definitely some 1-minute zone will be here. Strong order flow. So anyway, we didn't plan a trade here because prices didn't go inside. And this is already having multi-testing. You may ask a question, next time can we plan a trade? It is a risky because this time prices went very deep inside close to the proximal. And we are sure we won't plan any last 5 minutes trade. Even crazy trades also we don't plan during last 5 minutes. Maybe last half an hour if you are doing any trading, maybe that could be a crazy trade. I think once we tried in, I don't remember, is it HDFC Bank? Remember, last month only we did one crazy trade, 5 minutes. But anyway, last 5 minutes you cannot do. Last 30 minutes could be sometimes okay, sometimes. But that is a crazy trade. So next one, Conquer we already discussed, and the last one is Coromandel. Coromandel I think I already explained you earlier. I don't know. Recently once we discussed the demand zone we discussed, but today our report is Coromandel is having a high liquidity demand zone, but yesterday what we got is about supply zone, Coromandel supply zone. So I have to explain you how I fine-tuned. Today prices didn't enter into this zone. This is what our software identified, drop, base, drop. So a 15-minute zone we have identified inside that supply zone. So we have a drop, 3 base candles, 1, 2, 3, 4, 5 base candles and again a drop. Or even this is also you can consider as a leg candle, leg in, 3 base candles and a drop. That way also okay. So either way we can plan. And within this area, again we should look for a 5-minute zone. Some interesting thing I found in my analysis. Let me show you that. Slightly went outside the zone, consider the zone. We have a leg in, we have 2 base candles and a drop candle. So this is the way we have drawn this zone here. But prices were moving here only. Not much push. I am not sure how good this zone will be. I just drawn, but not having confidence about this zone. But other way the confidence we have to show is not pushing down, but also not letting the price here is not letting these candles move up. That is the positive factor. Negative factor is from this zone, it took a lot of time to get a push. We have both positive and negative points are there. When you have such kind of things, better just observe those stocks. Trading could be risky. Later on any price action clues like these rejections are there before this zone, but this is before this entire zone, not fine-tuned. Suppose prices came close to fine-tune and there is a huge rejection, maybe at the time you can plan trade. Otherwise this is risky. If the risk is very minimal, nothing wrong trying. In case if it is failed, only a small amount of money we might be losing. Okay, this is about how I analyzed the stocks from these high liquidity zones. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.